Hello guys, welcome back to another Linktree video. Yes, this is a second video in the day, and that's because the first one was more on why the market was pulling back so heavily today. So if you want to check that out, just go on the channel and you can see that. Now we're going to do our small cap recap, which will be on EDSA and why, well, it's up 100%. Where can we see it going? So looking at firstly the daily chart, can we see, is there any gaps that need to be filled? You can see any gaps that were created in the past have all been filled, and we've created a new gap now between 746 and 590. So this gap will most likely get filled, so be looking at it short, or if you are short, these could be considered good price targets. Now, where do we see it going maybe tomorrow and the rest of this week? So firstly, you can see on the 4 hour and the daily, it has now closed above the fourth deviation. And if you watched videos before, you would have known that if they close above this fourth deviation, we don't trade them, because then they're trading at an extreme, and they don't trade with as much sense because other people are too emotionally heavy on these stocks. So as soon as it's closed above this, which it has today, certainly I won't trade that. But if you are looking to trade it, where do we see it going? We can actually see it's moving a bit in after hours trading, but that doesn't matter all much. We'll go kind of more off the daily, and we will place these support and resistance signs at each of these deviations. Why are we placing support and resistance signs at each of these deviations? That's put because these are most likely either reversal zones or bounce zones, and as we're very oversold, these are more likely to be small bounce zones, but when we're breaking through, we're getting a lot more strength to the downside every time. So the key ones we have coming up close is obviously around $9, and the 850. That's the fourth deviation on both the 4 hour and the daily. These ones are not unlikely to close below. The ones to really be keeping an eye out is if we bounce when we come into the 807 and the 774. Why do I say that? Because those are the third deviations. Most people only look up to the third deviations if they use deviations. And if you learn about standard deviation, whether that's school, college, whatever like that, you tend to only learn up to the third deviation because it's very unlikely for data to go outside of that third deviation. So that's a bigger one to be keeping an eye out, because that's usually the biggest reaction zone. So if a stock, well, when EDSA pushes down to this third deviation, what we'll either see is a large bounce off this, and we would probably push to a new high. Quite unlikely, but could happen. What's more likely is we close below the 775, which would be the third deviation on the 4 hour. And the reason I say that's the key target, because it's the lower one between the three deviations. So once we get a close below that 774, we would most likely from there get quite a fast pull down back to fill this gap to most likely around 590. So that is what I see happening with EDSA. Would be short. Personally wouldn't be trading it, but if I was, I would be looking just to be short once we have kind of confirmation that we can close below the third deviation on the 4 hour, so in this case 775, and then we'll be looking to be short all the way down to around 590. So that's it on EDSA recap and breakdown analysis on it. So I hope you enjoyed the video, hope to see you in the next one, and that's it. Peace.